do. Is it perfect? Neither was email when it was invented in 1972.
This is the greatest Bitcoin explanation of all time. If you have a family member that doesn't quite understand cryptocurrency, send him or her this. They will thank you.
Thank you for the opportunity to speak with you today. My name is Peter Van Valkenburg, and I'm the Director of Research at Coin Center, an independent nonprofit focused on the public policy issues affecting cryptocurrency and public blockchain networks. What is Bitcoin? Bitcoin is the world's first cryptocurrency, and it works because of the world's first public blockchain network. What does Bitcoin do? It's simple. It lets you send and receive value to and from anyone in the world using nothing more than a computer and an internet connection. Now, why is it revolutionary? Because unlike every other tool for sending money over the internet, it works without the need to trust a middleman. The lack of any corporation in between means that Bitcoin is the world's first public digital payments infrastructure. And by public, I simply mean available to all and not owned by any single entity. Now, we have public infrastructure for information, for websites, for email. It's called the internet. But the only public payments infrastructure that we have is cash, as in paper money, and it only works in face-to-face transactions. Before Bitcoin, if you wanted to pay someone remotely over the phone or the internet, then you could not use public infrastructure. You would rely on a private bank to open their books and add a ledger entry that debits you and credits the person you're paying. And if you both don't use the same bank, well, then there'll be multiple banks and multiple ledger entries in between. With Bitcoin, the ledger is the public blockchain, and anyone can add an entry to that ledger, transferring their Bitcoins to someone else. And anyone, regardless of their nationality, race, religion, gender, sex, or creditworthiness, can for absolutely no cost create a Bitcoin address in order to receive payments digitally. Bitcoin is the world's first globally accessible public money. Is it perfect? No. Neither was email when it was invented in 1972. Bitcoin's not the best money on every margin. It's not yet accepted everywhere. It's not used often to quote prices, and it's not always a stable store of value. But it is working, and the mere fact that it works without trusted intermediaries is amazing. It's a computer science breakthrough, and it will be as significant for freedom, prosperity, and human flourishing as the birth of the internet. And Bitcoin is just the beginning. If we can replace private payments infrastructure, then we can replace other private choke points to human interaction as well. Now, why should we want to build more public infrastructure? Why should we embrace blockchains over corporate intermediaries? Why should we tolerate their inefficiencies and work to make them better? Why should we want the pioneers of this technology here in the United States and not fleeing overseas? A simple reason. Because the corporate intermediaries providing today's critical but privately owned infrastructure are becoming fewer, larger, and more powerful, and their failures are increasingly grave. So roughly half of all Americans, 143 million people, had their Social Security numbers exposed to hackers because of a breach at Equifax. The SWIFT network has relayed hundreds of millions of dollars in fraudulent transactions because of hacked member banks in Bangladesh, Vietnam, Ecuador, and Russia. The FBI suspects now that the largest of these hacks was perpetrated by North Korea. Corrupt, low-level employees at an Indian bank, Punjab National, were able to fraudulently certify SWIFT messages, stealing $1.8 billion. It's the largest electronic bank robbery in history. In fact, it's the largest bank robbery in history. In October 2016, an estimated 1.2 million internet-connected devices were hacked and turned into a botnet that for several hours made prominent websites unavailable across Europe and North America, including CNN and Fox News, the New York Times, and the Wall Street Journal. Increasingly, physical machines are being connected to the internet to augment their capabilities. They're wired through servers that are owned and maintained by private and trusted intermediaries. The so-called Internet of Things. Pacemakers from St. Jude's Hospital have been hacked. Baby monitors from TrendNet have been hacked. And Jeeps from Jeep have been hacked to the point where they can be remotely commandeered and driven off the road. Now, those vulnerabilities are inescapable in systems that have single points of failure. It doesn't matter if the point of failure is a corporation or if it's a government. There shouldn't be a single point of failure. Similar choke points existed before the internet. If you wanted to deliver a message, you'd have to go through one of 3 television broadcasters or a handful of newspapers. Private corporations are essential, but no critical infrastructure should rely on 1 or 2. The internet removed single points of failure in communications infrastructure and ushered in a wave of competition among new media corporations building on top of its public rails. Blockchains can similarly disintermediate critical payments and IoT infrastructure. The technology is not yet ready to answer all of those questions today, but it is our best hope. And as with the internet in the 1990s, we need a light touch, pro-innovation policy to ensure that these innovations flourish in America for the benefit and security of all Americans.
And one more clip just to expand on that. Here is Brian Brooks, the former United States acting comptroller of the currency, explain the difference between Web 1, Web 2, and what cryptocurrency is Web 3.
So the characteristic of Web 1, if people remember their original AOL account, was an ability to look in a curated walled garden at a set of content that was not interactive but was presented to you on AOL the way that Time magazine used to show you the articles they wanted you to see inside of their magazine. Just you could see it on a screen. The innovation of Web 2 was that suddenly you could not only read content, but you could also write content. This is when the blogosphere became a big thing. People remember this from the late 90s, the early 2000s. The reason for the centralization of the internet, of course, was that all of that activity was being monetized by a very small number of companies. Facebook, as the chairwoman mentions, Google, and 2 or 3 other companies. What makes Web 3 different is the ability to own the actual network. And that's what crypto assets themselves represent, is an ownership stake in an underlying network. So when you hear people talk about, for example, layer 1 tokens, what they mean is this is your reward for providing the ledger maintenance services, the computing power to the network that on Web 1 and 2 was done by Google, right? So now people in my hometown of Pueblo, Colorado can actually own the Ethereum network, but they can't own the internet. That's owned by Google and a few other companies. That's what the project of crypto is all about, is allowing people to directly own the networks that have native assets that are supporting it, and that's the nature of decentralization, where the token holders are the people who control the asset, not
so
Google.
Token holders, for our language here on the Hill, those are digital assets, right? Which are the keys to open up the ledger for you to participate, right?
Correct.
So describe to us how those digital assets fit into this internet revolution, Web 3.
So the concept is that you have sort of application layer tokens and you have protocol layer tokens. So if I'm an owner of Bitcoin, let's say that I'm a miner of Bitcoin, somebody who actually creates Bitcoin. The Bitcoin is the reward I receive for doing the work to keep the network operational, and that allows me to own a piece of the Bitcoin blockchain. Or take Ethereum, which is easier to understand. The Ether token represents an ownership stake in the network, but on top of that network are all kinds of apps that get built on the network, much like the apps on your phone depend on the underlying network existing that lets the phone operate. And so people will make judgments about which network is likely to win, and they will invest in the tokens in that network much the same way you might invest in Google stock because you think Google is going to scale access to the original internet. The difference being here, you can vote on what happens in the future of a proof of stake network, for example. You can get rewarded through a proof of work token for maintaining a ledger on something like Bitcoin. But the real message here is that what happens on the decentralized internet is decided by the investors, versus what happens on the main internet is decided by Twitter, Facebook, Google, and
XRP holders, welcome back to the Crypto ZX channel. Let's waste no more time and take a look at what's happening with XRP and of course what we could be expecting going into Friday morning. You guys are amazing. Continue supporting and you will see a continuation of these updates. So a lot happened, as we know, since my last update. I did discuss with you guys what's happening with the broader market. So it shouldn't be a surprise, but if you did miss that update, obviously I'll keep you guys covered in this update. So looking across the board, we're seeing a sea of red. XRP still holding much better than the broader market. A lot of people overlook this, but look at it for yourself. Multiple coins down 8 to even 15%, some even down 20%, but XRP is only down about 6%. So it's actually holding better than a lot of people realize. But XRP's price right now going into Friday morning, $2.11, down 6.1% in USD, down 3.2% in Bitcoin comparative. Market cap at $124 billion, and the 24-hour trading volume is at about 3.5 billion. But before we get into it further, as always, just a quick disclaimer, anything on this channel is not financial advice. Always do your own due diligence and research when you are investing in cryptocurrency. So, Coinbase CEO Brian Armstrong says Bitcoin could be the reserve currency of the world. Some big statements coming out, and why not? Why can it not? If you really study BTC, if you understand how this asset class works, how scarce it is, it all makes sense why you're seeing so much institutional interest coming in at record levels for this digital asset. So I'm not writing it off. I would love that, of course, but it's not a small thing to become, a global reserve currency. It takes time, but in terms of an adoption standpoint, we're already starting to see things really taking place. But look at this, shout out to Smoke. Yes, corporations will continue to add XRP to their balance sheet. Obviously this is a tweet from him before. You can see why corporations will continue to add XRP to their balance sheets. Corporations and banks are adding XRP to their balance sheets for more than just an investment purpose. By holding XRP, financial institutions can streamline their reserves, eliminate the need to maintain multiple Nostro accounts. This simplifies operations by only requiring domestic currencies and XRP. This not only reduces the complexity and cost of foreign exchange, treasury operations, and liquidity management, but also helps banks comply with Basel III liquidity requirements. In addition, using XRP mitigates the risk of bankruptcy associated with correspondent banks holding funds, making the entire system more resilient. As more banks and corporations adopt this approach, the demand for XRP will grow. This increased demand will drive up XRP's trading volume and price, which of course we're starting to see happen. And on top of that, this video, shout out to Subjective Views, really came out. You can see BlackRock is saying crypto acts as a crucial gateway, helping institutions build comfort with digital assets before broader tokenization adoption. Also, love the fact that Robbie is wearing a Ripple lanyard. So, Robbie, of course, who is at BlackRock, is wearing, this Ripple, lanyard. Of course, got a lot of people talking. Wait, hold on, these guys are not playing around. And BlackRock, regardless of someone wearing a lanyard or not of Ripple, they know what Ripple is, because again, if other asset managers are filing for ETFs, do you think these guys are not paying attention? Because at the end of the day, those are these guys' competitors. So again, these guys are aware of every single thing. I think they wait for something specific. Maybe they're waiting for this SEC situation to completely be done. We did hear some good news coming out of that. Oh, imagine, if that happens and, BlackRock comes on board and just files for an ETF. I think the announcement itself, without getting approved or not, BlackRock, filing for an ETF, spot ETF itself would be quite bullish for the broader market. So we'll see what happens. Obviously, we're speculating right now, but shout out to Smoke, Trump and utility tokens. You can see we expect Trump to be more favorable candidate for utility-driven crypto initiatives, and we have seen something similar to that, kind of happen at the beginning of this year when he did come into office. A lot of speculation happening that U.S.-based utility projects that have real-world use case are going to be tax exempt for capital gains. Obviously, that's still up in the air, but it makes sense. It makes sense, and of course, right now, it's still up in the air. Nothing is confirmed, but if that were to happen, it would happen to utility projects, in my opinion, not memes, because in terms of memes, they don't really bring any sort of utility. Let me know in the comments what your personal thoughts are on that. And Ripple CEO also says XRP could, capture 14% of Swift's market in 5 years. I don't think he's talking about native token XRP. I'm pretty sure he's referring to Ripple as a company itself. So that's something that I wanted to just clear up. And also look at this. Shout out to Chad. We're at watershed inflection point moment of digital transformation of institutional grade financial products. With the combination of Ondo Finance and Ripple, the XRP ledger is at the forefront of this revolution. Mint and redeem RLUSD in real time. And we know that was a big moment for Ripple. But let's take a look at what's happening with the price. So obviously dominance is booming right now. Dominance is gaining a lot of momentum. BTC, on the other hand, did end up losing that support at 106,000. But again, it doesn't really matter what support it is. But when it comes to some external factors causing the market to go down, these supports won't really matter, because those are more important things that people are paying attention to. BTC did come down to 102,661. Since then, has been able to reclaim back above 104, which is nice to see. Of course, we'll see what happens. Still has a long way to go. We want to see BTC claiming back above 106,000. If it's able to do that, I think we could pretty much pick up where we left off of quite fast. And if you're looking at XRP, still, even though since our last update, I spoke to you guys about how the 38.2 Fibonacci support line is still not retested, and since then, still it hasn't been retested, which is quite interesting, and once again gives us more confirmation how good this price has been accumulating pretty much since this major breakout from November. We have been consolidating nicely within the 38.2, which a lot of people forget, but not on this channel. Let me know down below what you guys think. Thank you for all your support. We'll see you later in Crypto ZX, and peace out.
All these coded messages that we've been seeing regarding, well, many things connecting to Bearable Guy and 589. Here's Trump reminding us he's watching his words very closely. What, pray tell, does stable genius refer to? Well, Not Financial Advice did retweet his original tweet back from May 20th, 2025. So just under a month ago, about 3 weeks ago. And here's what he said on January the 6th, 2018, the day XRP hit its all-time high. Donald Trump tweeted he was a very stable genius. So that was January 6, 2018. And guys, what else happened on that day? The Ripple all-time high occurred about a year later. Actually, it was on that day, January 6, 2018, when the XRP price rose to about $3.40, $3.33, $3.84, depending on the exchange you're looking at. Tonight, though, the Genius Act moved forward, laying the groundwork for regulatory stable coins. So what are the chances? And by the way, the day he tweeted 1,618 is also the golden ratio, 1.618, the perfect tone setter for the golden age. Now, he was also retweeting out Senator Bill Hagerty's tweet here. Today, the Senate moved forward on the Genius Act. This groundbreaking bipartisan legislation will bring America's payment system into the 21st century. The Genius Act skyrockets the United States with a digital payment framework with the fastest rails possible. It will ensure U.S. dollar dominance. Customers will be protected. The demand for U.S. treasuries will balloon to the tune of more than $1 trillion. And innovation in the digital asset space will thrive in the United States going forward. I look forward to making history with my colleagues this week. So let's keep our eyes on what's going on in Congress, guys. This is a big deal. This is how crypto markets work. They suppress it early, accumulate cheap, and then promote it once it has been positioned. So crypto markets, for all intents and purposes, have been, they have been suppressed for a few years now. I mean, 2022 was obviously the bottom of the bear market. Bitcoin has slowly been moving up since then, but here we have it, guys. And right in time for a big liquidity event, as we're seeing, the Bitcoin price move up slowly but surely. I mean, it's not in the euphoric phase, not quite yet. Same thing is occurring with XRP at the moment. As of the time of this recording, at least, we're still seeing XRP really kind of trading within this zone here. We're waiting for that next euphoric move to the upside. Again, we're still trading in a spec market, but that could change at any moment now, considering we do have stablecoin regulation on the table, and we're getting closer and closer to meaningful real-world utility. So